Good afternoon. It's Brian Shannon from Alpha Trends Blogspot. Today is Thursday, August 16th, 2007, and we had a little bit of a reversal here today, at least in the SPY. I'm showing it right now, 141.72, which puts it up at up 70 cents on the day after a real tough start to the beginning of the day. You can see here the huge volume in the market traded today, and there's a phrase that goes with volume, which is big volume without further downside progress equals accumulation. And that's what I think you can look at here today, is that we saw a high volume, really panicky sell-off early in the day, and then the market turned around late in the day. A couple of readers had pointed out, and I'm hesitant to share this stuff on the blog because it's I don't really want to put the intraday stuff on there too much, but a nice little inverted head and shoulders pattern in the SPY. You can look at this, and again, price targets are just a potential area where the market might go. I'm going to show you that other one that I pointed out intraday on the blog as well, but 140.5 is where it broke past that level. You could call the bottom, just to be conservative, 137.5. So that would give us a price objective of up near 143.5. From this move, and we're almost there, so it's halfway to that level. If we look at 143.5 on the daily time frame, that puts us here. I think this bounce could probably continue up towards the declining 10-day moving average, maybe even get up towards that 200-day moving average. But it looks like the worst is behind this market for the very short term. I still think that the market has big problems. We've got this declining 50-day moving average, and this is potentially setting up one of those fast bounces in a primary downtrend that will inevitably fail the way this one did right here. So hopefully you've got some shorts covered. Maybe it was my short selling class that I had done on the web for free today that helped act as a contrarian indicator. If so, I don't mind. I was the first one to point that out, that it might be a good contrarian indicator. So hopefully we see more of a turnaround. I had pointed out during the day what's known as the measured move. This high here was at 156 even. Down to this low here was 142.53. The subsequent bounce brought the S&P 500 up to 150.59. And so the height of this move right here, from this high down to the low at 142.53, that equaled $13.47. Once the bounce took place, we then take the height of this prior move, subtract it from the high point, and that gives us a price target down at 137.15. I didn't correctly 137.12. I had incorrectly stated 136.12, but 137.12. And today's low was 137 even. So perhaps it's a little bit of measured move coming into play. We've definitively taken that 200-day moving average out, which means there continues to be problems going forward for this market. But it looks like we're going to get a bounce here a little bit. We've still got a 5-day moving average that's declining. So if this market does continue to bounce, there's a potential level of resistance for it. Also, you can look at this downtrend line. It'll probably meet up in about that same area, which is, let's call it 143 or so. And that's this prior level of support. So look for the potential of resistance up near this area, near 143. The risk, there continues to still be a lot of risk in this market. The daily trend is lower, the intermediate term trend is lower, and the very short term trend turned higher today. So that does not make it high odds for a continued bounce. If you're going to be trading the long side, wait for a pullback, see if it pulls back towards this level, if the 140.5 can hold as support, and then buy subsequent strength as it rallies away from that level. And keep your stops tight, and small position size is the way to compensate for still the very high risk that we have in this market right now. As for the SMH did find a little bit of support near this 200-day moving average. It came down, punched through that, and big volume in there as well. We had a 5-cent gain in the SMH, so perhaps we're going to get a rally back up towards this $37 level. Again, it's most likely just a short-term bounce if we get it. That's where we have the 5-day moving average right now. You can see, though, that the 5-day moving average is still declining, which means a rally is more likely to fail than it is to hold. Don't look at this market and think it has to go up just because of how much it's been down. If you look at the FXY, which is the Japanese yen, this is a big issue globally at macro markets. I'm not going to get into the reasoning for it, but we did see some relief in it at the end of the day, which might have helped fuel the rally in the spiders and this SMH, the IWM, of course, too, and the Qs. The IWM is once again showing a little bit more relative strength in here recently, and that might be due to the fact that with this multi-year trend line and the prior levels of support that we'd seen late 2006 and earlier this year. So this market also very big volume without further downside. Big green candle, meaning that today's open was right here. The close was much higher than the open. It gapped lower, flushed people out, made that lower low in here, which was panicky, but the big volume turnaround signals that perhaps some big shorts covered and we got some fresh longs coming into this market. Still, again, though, very high risk. We've got a declining 5-day moving average. Look for this rally to fail at some point, but that volume tells me that maybe we're going to get a little bit more of a bounce, maybe up to 78 or so. Only the most aggressive, most disciplined traders. I know I sound like a broken record, but those are the only guys that should be trading right now. The NASDAQ 100, this market came down very decisively through that 200-day moving average. We had a huge volume in here as well. However, it didn't turn around. It was down 52 cents. So not quite as convincing in here that we might have seen the worst. And the fact that it closed lower than where it opened showed that buyers just weren't as interested here today. You know, we saw Goldman Sachs turn around, big volume too, biggest volume we've seen so far in a green candle. So Goldman Sachs, I think, is still in big trouble. However, interesting to note, too, the 50-day moving average crossing through the 200-day moving average. Keep an eye on that because a lot of people call that the death cross, meaning that when that 50-day crosses down through the 200-day moving average, they consider that to be a sell signal. I think it's way too late for a sell signal, and I think this is going to be a pretty important short-term bottom near 160, 157, whatever the low was in here today. But I wouldn't be surprised to see a rally up towards 180, 185 in this stock, and it's going to show how late this death cross tends to be. Back to the NASDAQ 100, though, let's take a look at that on the intraday action. The intraday action, we did see some big volume come into it at the end of the day, and a really big volume all day here. Let's take a look at a shorter-term time frame. You can see, though, that it looks like the bigger volume is coming in as the market rallies. During this decline right here, a little bit lighter volume and then big volume at the end of the day once again. The 5-day moving average is clearly continuing lower. The $47 level is a very important level that we've seen act as prior support and then as resistance on, I guess that was Wednesday. Now we've got continued breakdown. The short-term trend, the short-term time frame, that is, a 2-minute time frame, we did see a higher high and this higher low, but very messy. If you're looking for a bounce, again, it's very high risk. Wait for a pullback, maybe even all the way down to 45, maybe even lower, but wait for a pullback. Don't buy this extended market. As I said in the short selling class today, for instance, with the QID, the inverse, double inverse Qs, that always don't chase the market. Always ask yourself, where has the market come from? Where does it have the potential to go before it's likely to meet a source of supply that might hold it back? And that, in this case, it's a 200-day moving average near this 50.5 level where it closed, and it's just moved from 43 up to 53, 52.5 in just a matter of 2 weeks, which is, again, the inverse of the NASDAQ 100, and it's too late to be selling short in here. Wait for another bounce. Wait for that bounce to show signs of deterioration. Then it's okay to start selling short again.